Hello, and thank you for joining me, Fiona Cincotta, Senior Market Analyst at City Index, as we look ahead to earning previews for Netflix and Tesla. So both Netflix and Tesla are due to report Q4 earnings this week, kicking off tomorrow after the close with Netflix. Then Tesla is due to report Q4 earnings on Wednesday, the 24th of January, after the close. So let's start with Netflix then, what to watch. Okay, so after Q3 earnings, we saw Netflix share price gap sharply higher, and that's because we had some strong numbers from the streaming giant. Subscriber numbers came in much stronger than expected at 8.78 million, well ahead of the 5.49 million that was forecast. Now, we've seen these strong numbers come through from Netflix in response to their crackdown on password sharing, and also thanks to the ad support subscription tier, as well as some very timely price hikes. Now, the company's growth initiatives have really been paying dividends, and that's been very clear in the share price. If we have a look here, this is the weekly chart for Netflix. It's been trading within that ascending channel. We had really strong growth across 2023. That was a rise of around 65%. The price hit a recent high of just over $500. The share has just eased back slightly ahead of earnings season. Now, if we do see a rise above that $500 the share, that's going to bring into focus around that 565 level, which was important back at the beginning of 2021. On the downside, you'd be looking for support from the 200-day moving average, and that's around the $425 level. So just moving on then to Tesla. Now, with Tesla, what they have happened, we saw they recorded record deliveries in 2023 of 1.81 million. But in doing so, it's also lost its crown to BYD in the process. And this is basically, we've seen very aggressive price cuts has been what's been driving these strong deliveries. But this means, well, this has been having a detrimental effect on margins, and we're expecting that margins could fall further again this quarter. As far as revenues are concerned, we're expecting to see a 6.7% increase to 27.76 billion, but EPS is expected to decline around 37% year on year to around 73 cents the share. Just having a quick look here at the chart. Again, this is the weekly chart. We can see that since the start of 2022, really, Tesla has been trending lower. Now it's found some support. Well, it's just testing the support now of that 200-week moving average. Is just moving below that. If we do get a move below that, then watch out for that support level around the $194. Break below that could bring in the further support lower around $150 a share. Now, on the upside, if we do find that 200 SMA is holding, then be looking for a rise eventually, potentially towards the 215. That would create a higher high and open the door potentially to around the $300 the share level. Now, it's just really interesting to take a look at these share prices as we head into earnings for Tesla and Netflix this week. And then we've obviously got big tech coming up as well. What we're seeing happening in the Nasdaq. Now, the Nasdaq rose to a record high last week. We can see that it's really pushed higher, and that's been despite this narrative of the Federal Reserve expecting perhaps, not to support early interest rate cuts. But even so, this AI optimism around cloud computing has really driven the Nasdaq higher. Buyers are going to be looking to break above that 17,500 level in order to extend gains further. Now, thank you very much for watching. I hope you've enjoyed and liked what you've seen. If you have, then please do remember to give this video a like. And for further videos like this, then please do subscribe.